as that gentleman from LinkedIn was saying, people worry too much about prices, right? Think of the long game. The long game is that you want to have physical, and there will be one day where it will be really hard to get both physical gold and silver. I would venture to say that the smart money in the US and Europe, they're buying physical as well, and that's completely unraveling the paper market, not just on Comex, but in the LBMA.
The U.S. dollar continues to face headwinds, with persistent volatility driven by rising geopolitical tensions, particularly in the Middle East. As uncertainty mounts, investors are increasingly shifting their strategies towards safe haven assets like gold. Central banks are expected to follow suit, accelerating gold purchases to hedge against a weakening dollar and broader economic instability. MarioInnecco of MonEcco 64 emphasizes the importance of a long-term view, cautioning that the time may come when acquiring physical gold or silver becomes increasingly difficult. He notes that the daily noise in price movements is less important than securing access to tangible assets before market structures begin to falter. Recent data from the World Gold Council confirms this trend. Central banks have acquired over 1,000 tons of gold annually for 3 consecutive years, more than double the previous decade's average of 400 to 500 tons. This surge reflects rising concerns among reserve managers over inflation, currency devaluation, and global conflict. Innecco points out that even in the US and Europe, institutional investors are turning toward physical metals. While silver saw a sharp rally in 2021, it experienced a notable decline in 2024, especially in the US. However, a partial rebound is projected in 2025, with a 7% increase expected in demand for silver coins and bars, signaling renewed interest in physical silver alongside gold as the broader financial system continues to evolve. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
But this is all changing now. There's another article here, which I told you about on LinkedIn, by this guy called Peter Borgia. I'm not sure how you pronounce that. He's sounds like a Dutch name, but he's based in Dubai, and he's in the gold market. And he recently posted this, and I'll go through it. He says, gold isn't just consolidating, it's cornering the paper market. So you see, it's the futures market, which the dealers talked about in 1974, which would negate long-term hoarding, is crumbling. So this is what he means, cornering the paper market. It means that paper market is just basically on its last legs. He says, while the media fixates on prices, yes, we always focus on prices, right? The real story is in deliveries. Since Trump's re-election, 817 tons of gold and 8,550 tons of silver have been stood for delivery on Comex. Not trades, demand for metal. But Comex net warehouse deliveries covered just 645 tons of gold and 7,146 tons of silver. That's a shortfall of 1,400 tons of silver in the physical market, slowly bleeding out. Silver looks volatile, but it's not noise, it's friction. No one's talking about it, but central banks are choosing possession over price smoothing. Yes, it's not just the taxpayers' organization in Europe that wants the physical gold back. It's also all the global South countries. It's also China, Russia. It's also Poland and others that want physical. They don't buy futures. And I would venture to say that the smart money in the US and Europe, they're buying physical as well. And that's completely unraveling the paper market, not just on Comex, but in the LBMA. Is it any wonder we had a 4 to 8 week delay for spot delivery at the end of January? And I spoke about that. That was a really important milestone. Even the Bank of England's vaults have seen withdrawals that might not come back. At Iona, we don't just stud prices. study price. We study what people settle when no one's watching. What happens when gold stops trading and starts vanishing. Steve Hanke, professor of applied economics at Johns Hopkins, posted yesterday, gold is leaving the vault. Comex inventories are falling. Demand for physical gold is exploding. Buy gold, wear diamonds. Yeah, that's an old terminology in the markets, especially in the futures and commodities markets, which I worked in. And I think Professor Hanke, he did trade the commodities markets years ago. So yeah, that's an interesting one. Buy gold, wear diamonds. So just one more thing before we look at the markets. I just saw a post here from Weimar Silver Baron. It says Iran is now calling on other Middle Eastern countries to sell U.S. treasuries. And there's a headline here, your treasuries pay for the bombs. Get out while you can. Am I pro-Iranian or pro-anything? No, as I've said many times in the past. But I've also told you in the past that by holding government bonds, you're financing governments. If you are okay with the U.S. bombing Iran, go ahead and buy treasuries. But if you're not, don't buy it. And the same thing goes for UK government bonds or gilts. If you are happy with what the government is doing here, go ahead and buy gilts and be ripped off. That's what happens when you buy bonds and they're inflating the money supply. But if you're not, yeah, don't buy gilts. Buy real physical money, i.e. gold and silver for that matter. So I expected to see quite a lot of volatility, and I admit I've been wrong. We're not perfect, right? The markets last night, London time, they did open down. The stock market, they were down about 0.5%, maybe a little more. Gold did trade up to 33.98. Silver actually was down in the beginning of the day. The price of oil went up to, let's see, it went up to 77.75, so it didn't even breach the 80 level. And right now, actually, gold is down about 14 bucks at 33.55. But as that gentleman from LinkedIn was saying, people worry too much about prices, right? Think of the long game. The long game is that you want to have physical, and there will be one day where it will be really hard to get both physical gold and silver.
In 2017, Germany repatriated nearly $31 billion worth of gold bars that had been stored in New York and Paris since the post-World War II period, a move that underscored the importance of national control over sovereign assets. Now, with renewed geopolitical instability and criticism of the Federal Reserve from figures like former President Donald Trump, the pressure on European countries to retrieve their gold is rising once again. According to MarioInnecco, Germany and Italy are currently under growing pressure to bring back an estimated $245 billion in gold still held in the United States. The conversation has intensified as confidence in long-standing financial relationships shows signs of strain. Fabio De Masi, a former member of the European Parliament, told the Financial Times that European countries must seriously consider relocating their gold holdings in these uncertain times. In Germany, the call for repatriation has gained political momentum, with lawmakers across party lines urging the Bundesbank to safeguard the country's reserves by maintaining physical possession. Although the Bundesbank continues to describe the New York Federal Reserve as a trusted custodian, the broader debate reflects a shift in sentiment. As global financial and geopolitical tensions rise, so does the emphasis on direct control over physical gold, a trend increasingly seen as a strategic imperative rather than a symbolic gesture. Let's get back to the interview.
It says Germany and Italy press to bring $245 billion of gold home from the U.S. And it says here, Trump's attacks on the Fed and growing geopolitical risks reignite public debate about repatriating bullion. And I'm gonna also refer to President Biden. And of course, the official narrative is that people don't really know who blew up Nord Stream 2, that it was probably some Ukrainian agents, but there's that Pulitzer Prize winning journalist, I forgot his name now, American, Seymour Hersh, who basically proved that it was the Biden administration who organized the blowing up of Nord Stream 2, which is a German asset, supposed to be one of your closest allies. But in reality, America's allies are America's minions, right? Empires never have allies, they have minions. But anyway, enough of empire bashing. Let's go through this article. It says Germany and Italy are facing calls to move their gold out of New York following President Donald Trump's repeated attacks on the U.S. Federal Reserve and increasing geopolitical turbulence. Yeah, I think those factors are both really important. Fabio De Masi, a former Die Linke MEP who joined the left-wing populist BSW party, told the Financial Times that there were strong arguments for relocating more gold to Europe or Germany in turbulent times. Well, there's the old saying, he who has the gold, has the power, right? It's interesting. It's funny that Fabio De Masi, I started reading that and I thought it was an Italian, but he's actually German. Anyway, Germany and Italy hold the world's second and third largest national gold reserves after the U.S., with reserves of 3,352 tons and 2,452 tons respectively, according to World Gold Council data. Well, in the U.S., we don't even know actually how much gold they have. Just like the Epstein files and the JFK files, these things were supposed to be released. There's a call for an audit. Even Donald Trump, President Trump, came out and said, we don't think we have our gold, but that's gone out the window. There's only one guy who's now public enemy number one for Donald Trump, Thomas Massie, who wants to see an audit. He's of course someone who also wants to see the Fed abolished. So there you go. I think Thomas Massie has been a big winner of the current crisis, especially in the last few days. He's become very popular, and it's a good thing. He's a constitutionalist. Both rely heavily on the New York Federal Reserve in Manhattan as a custodian, each storing more than a third of their bullion in the U.S. Between them, the gold stored in the U.S. has a market value of more than $245 billion, according to FT calculations. I mean, this would be a massive blow to the U.S. banking system, to the Federal Reserve. You read through here, there's the usual comments from the Bundesbank, the German central bank, that they still trust the New York Fed, and so on and so forth. One of the major Maloney's party, political party, who a few years ago, before she came to power, was pushing for the gold to come back. They're being very coy, but let's continue here, because there's a big campaign coming from taxpayers now as well. It says here, the Taxpayers Association of Europe has sent letters to the finance ministries and central banks of both Germany and Italy, urging policymakers to reconsider their reliance on the Fed as a custodian for their gold. We're very concerned about Trump tampering with the Federal Reserve Bank's independence. Michael Yeager, the TAE's president, told the FT, "Our recommendation is to bring German and Italian gold home to ensure European central banks have unlimited control over it at any given point in time." And the interesting comment that I found here, that I've been telling you for many years since I started the channel back in 2015, is this one. For Boehringer, the principal argument to bring home the gold is not linked to the current U.S. administration. And this guy says, he's an MP for the AfD in Germany. He says, gold is an asset of last resort for central banks, and hence it needs to be stored without any third-party risk, he said, adding that at times of serious distress, it is not just legal ownership, but physical control over the gold that really matters. So there you go. And with that, I'm going to skip over to, or go back in time as well, and look at this WikiLeaks document, because I want you to understand how important the physical market is, and also the futures market, and the fact that all this call for repatriation of physical gold is really decimating the futures market. And what's the futures market for?
When the stewards of global wealth begin to quietly change course, it often signals deeper currents beneath the surface. What once seemed like distant financial maneuvering, like moving gold reserves or shifting from paper assets to physical holdings, is now increasingly being seen as prudent strategy rather than paranoia. With central banks and nations reasserting control over tangible reserves, and everyday investors following suit, the race for real assets may be accelerating before the world fully realizes what's unfolding. Could this growing retreat from paper claims and trust-based systems be the start of a broader monetary reckoning? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.